I'm joined by Paul Rawkins. He's head of Emerging Europe Sovereign Ratings Group at Fitch. Thanks very much for coming in, Paul. So do you sense any change of tone or any sort of shift in negotiations between Hungary and the IMF on the prospect of another bailout?
Well, I think in Hungary, I mean, there is a recognition that they will have to do a deal with the IMF because they have no choice, really. The IMF holds all the cards. Borrowing in the markets is becoming too expensive. And Hungary's problems are they're very country-specific. You know, there are problems in the region, but a lot of Hungary's problems are of its own making. You know, and as a result, it's undermined confidence, and it's very hard to restore that confidence. And it's going to need the IMF, an IMF-EU deal to do that.
So from what you're saying, you think a bailout is imminent? Could it happen in the next few weeks?
Hungary's not going to fall over tomorrow. It's still got some cash in the bank, but it certainly needs to happen. Certainly within the first half, yeah, easily.
And within the first half, and would that be enough to restore some level of market confidence, as you say?
I think if they sign up to all the targets, they seem to perform according to those targets, then you get a measure. I think you probably do get a measure of confidence, yeah, and you probably then get capital flows coming back in, and exchange rate stabilises, and it begins to look. A more manageable situation.
We were just mentioning there a little bit about the situation in Austria. How concerned are you, or how closely are you watching the spillover effects or the knock-on effects from Hungary to other neighbouring countries?
Yeah, well, all of emerging Europe is very heavily exposed to the Eurozone. It's the most exposed part of the emerging markets. Hungary's the most exposed because of the way it's conducted itself. So it is on negative outlook. Most of the other countries in our region are unstable at this point, but they were on positive previously. So there already has been some fallout because of the contagion, which is coming through trade channels, it's coming through banking channels, and it's coming through portfolio and capital market flows.
So from what you're saying, you're already seeing those signs of contagion from Western Europe to not just Central Europe countries like Hungary, but Eastern Europe as well. And is it through these two main things? Is it through trade and exports on the one hand and then banks on the other? Are these the two key sort of risks that you're watching?
It's trade, because some countries are very exposed to, Hungary. We've tried to do some rankings on this, and Hungary stands out as being one of the most exposed, but others do as well. Poland, Czech Republic, all FedEx. But they also have their banking systems are very heavily they're owned by West European banks. There's a squeeze on credit. That's not helping things. And portfolio flows have been important, and those are among the first flows to go really in a situation like this.
So would you say that we're already seeing signs of, we've seen funding stresses in the funding markets, if you like, already in Western Europe? Yeah. Would you say that that is already spreading to Central Europe and Eastern Europe? You know, it's already constraining credit.
I suppose it's going to affect countries which have got big external financing requirements. So Hungary is an example, perhaps, of that. Yeah, but as I say, with Hungary, it's not just about that. It's about Hungary's made the problem worse because of the way they've conducted policies and undermined confidence. But we've already taken a number of policy actions at the end of a number of rating actions at the end of last year, which may need to take these ratings back to stable outlook, which was a response to what's going on in the Eurozone. So a lot of the rating actions have been driven very much by what's going on in the Eurozone in emerging Europe.
I mean, I suppose it's unfortunate for them, isn't it? Because it means that to an extent they don't have control over deteriorating economic growth prospects elsewhere. Yeah, no, I mean that's true. But at least previously they were recovering from 2008-9, so they come at it from a rising. So what if another recession takes hold in Europe this year? Some economists are saying there are already signs of that. What does that mean for Eastern Europe? Are you anticipating further downgrades? Well,
it means slower. It means slower growth. For some countries which have got big borrowing requirements, it makes life more difficult. It means there'll be a bigger squeeze on credit throughout the region. All of those things, so they're all pressing down on the outlook. Yeah.
I just want to quickly get your thoughts on Fitch essentially placing Spain, Italy, Belgium, Slovenia, Ireland and Cyprus on rating watch negative review last month. I know that this isn't exactly your area of specialism, but it will be something that you're watching very closely. When are we going to get something more definitive from Fitch on that?
At the end of the month. We're anticipating to conclude those things all of those reviews by the end of the month.
Anything specific that you're watching, any sort of triggers or catalysts?
No, I think it's all been pretty well laid out in our public announcements so far. And I think now we're just conducting all the reviews, and they'll all be. I think we intend to close them all off at the end of the month and then resolve all those rating watches.
Thank you very much. Paul Rawkins, Head of Emerging Europe Sovereign Ratings Group at Fitch.